Hey, welcome back to the Mining Pod. Today's show, we're joined by Bespoke Group. They're a family office / private advisory for high net worth individuals. They mostly focus on figuring out how to preserve wealth for individuals through trust institutions or different allocations. They really specialize in Bitcoin and have been so for the last, say, 5 to 8 years. This is really interesting coming from a Bitcoin mining perspective, where it's like maybe you work at a Bitcoin mining startup, or maybe you want to figure out how to minimize taxation and protect against inflation for what other wealth assets you have, especially as we go into a bull market. Definitely stick around for the entire show. We talk through a lot of different strategies, a lot of different people who this could impact, and ways to protect you, holder of Bitcoin, against government, to inflation, to loss of life, etc. Thank you to Bespoke for making this happen. Thank you also to Foreman Mining and CleanSpark for being the lead sponsors for the Mining Pod. You'll hear advertisements for both these sponsors later on during the show. Okay, let's jump into it.
Hey listeners, let's talk about revolutionizing your mining operation with Foreman. This isn't your average management tool. It's an all-in-one solution for reducing costs and significantly boosting your revenue. Foreman brings a cutting-edge dashboard to your fingertips, empowering you with automated energy strategies. This means not only curtailing around real-time prices, but also strategically enhancing your profit margins through demand response. It's about leveraging energy efficiency to its fullest potential. With Foreman, you get a system that scales with your business, inventory management for assets, infrastructure integration, and business intelligence. Foreman elevates the cash flow and production of your entire operation. To see how Foreman can redefine your mining operation standards, visit foreman.mn. With Foreman, you're not just managing a mining operation, you're setting a new standard in the industry.
Accelerated by Compass is the premier accelerator program for Bitcoin mining sites at any stage of development. Our managed services provide expert guidance in site procurement, construction, energy agreements, and mining operations. Compass helps clients meet timelines and expectations for operational excellence, from greenfield to retrofits and everything in between. Don't just mine, excel. Visit compassmining.io now to discover how Accelerated by Compass can power your success.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Bespoke team, welcome to the Mining Pod. How are you guys doing today?
Doing great. Thank you, Will. Thanks for having us.
Yeah, it's cool to get some Bitcoiners in Colorado in person on the show. I think this is the third show we've done like this. I've had people fly in a little bit, but
nice.
Not too much. One day I'll get like private jet people. So,
sweet. Yeah. I love it.
Yeah.
Love it.
A little Denver hub going.
I know, right? So we got BitDevs is cooking. They're doing a great job over there. Zach's been doing an awesome job last 2-3 years building it out. The space is coming along like a Bitcoin group of some sort. I'm still trying to figure out how to like term it.
Kind of like the Bitcoin Commons type of thing. Yeah.
Yeah. And then we got like a bunch of Bitcoin companies, Foundry, Compass, you guys, my company, and I think there's like Crusoe here, a few others that I'm just blanking on. So yeah, definitely like a scene here. Before we jump into it though, let's do some bios so everyone knows who everyone is. Matt, I'll give it to you first.
Cool. Yeah. My name is Matt McClintock. I'm a recovering estate planning attorney after 25 years in the trenches of doing that. Along my journey, which we might get into, I kind of stumbled my way into Bitcoin in 2017, doing work for a super affluent Bitcoiner. And that created the opportunity for us to form Bespoke Group as a fractional family office for that person. And then we, over the course of the last several years, have been taking that to scale. So I'm the founder of Bespoke Group, still actively involved. I'm the executive managing director of the company.
Jack, your bio.
Yeah. Right out of college, I was a trader on Wall Street for a couple of years, trading for a hedge fund. And not long after that, I heard about Bitcoin from a friend in 2013. And coming off of Wall Street and seeing the way it traded at that time was really, really interesting. And it kind of was the initial hooks. And then from there, I kind of started my deep dive into the Bitcoin rabbit hole, kind of inspired by its objectives and its goals. And it felt like it was on the cutting edge, and it was somehow a global financial system. And I was just like, this is where I've got to somehow be involved. And then, many stories later, I came across Bespoke Group and heard Matt on a podcast.
Nice.
I had figured that the space was beginning a confluence between Bitcoin and crypto with the traditional financial industry. And I heard Matt talking on a podcast about trust structures and estate planning. And I'm like, I gotta see what this guy's up to. And so I met him for a drink up towards the mountains, a little outside of Denver, and just started working together. And it's been a exciting ride, and I love work every day. So it's an exciting confluence in this space, and excited to dig into some of that today with you.
Cool. Well, let's dig into like personal advisory in the first place and what Bespoke does. And then I want to go back after that to talk about like your journey finding like this, or this guy found you to help manage his wealth, which the context for that is this last year, I'd say from like December through May, maybe, we've had a lot of price action, positive price action. We're down a little bit right now, so people might be upset. But those few months, tremendous increases in people's wealth. A lot of people listen to this show are either mining Bitcoin, or they're interested in ordinals, or interested in like these random assets. And at the end of the day, like people want to preserve their wealth, transfer into USD, put in some sort of structure to minimize taxes. So that was the interest for bringing you guys on the show, and for Jack and I actually first started talking. So we'll get to that after, but let's go back to Bespoke and kind of talk about like what you guys sort of offer.
Okay. Yeah, sure. We really are a full stack multifamily office, primarily serving first generation clients who have made a significant amount of wealth. And we were formed around a Bitcoiner, and the majority of our clients are individuals and families with significant Bitcoin holdings. Although we are SEC registered, we have an RIA advisory arm inside of Bespoke. Our focus really is really on comprehensive wealth strategy. My background, as I mentioned, is estate planning. My co-founder, a guy named Jonathan Mintz, his background is in estate planning. We're both attorneys by background, and that's the lens through which we view every client's relationship. Although Bespoke is not a law firm, we don't practice law inside Bespoke, that's the lens through which we view a family's wealth. So our bias is to help clients think about their wealth in the context of how do you own your assets and where your assets are before we really even worry much about what the assets actually are. I mean, one of our guiding philosophies, maybe our North Star, if you will, is that it doesn't matter if you got into Bitcoin in 2010, 2011. It doesn't matter if you've just crushed it on 2018 NVIDIA stock or whatever it is that just mooned on you. If you haven't planned around the erosive effects of taxes, whether it's income tax or gift and estate tax, if you've not planned around the risks of forfeiture due to a lawsuit that doesn't go your way, or a divorce, or your kids not knowing how to act appropriately with a significant amount of wealth that just gets dropped in their lap, if you haven't planned around those things, all the financial outcomes in the world are not going to outrun those types of costs. So we help clients really think about estate planning very broadly in the context of asset protection, planning for privacy, planning for self-sovereignty, planning for preparing the next generation to inherit wealth with a sense of integrity, and of course mitigating taxes in all of its forms.
Which is the most Bitcoiner thing ever, right?
Right. I mean, I think that's kind of like, and we'll maybe kind of dig in a little bit more on the origin story, but that's why I think when I found Bitcoin, or maybe when Bitcoin found me, it was just, it clicked right away, because it's like, yeah, everything that I've done in my career is about sovereignty, tax mitigation, privacy, protecting family wealth. And here's Bitcoin that encapsulates all of that in a network and an asset that harmonizes so beautifully with those values. For me, it just became a natural fit. So I guess kind of to wrap it, kind of land the plane on what Bespoke is and what we do. We provide comprehensive wealth strategy. We do help Bitcoiners establish qualified custody with qualified custodians, whether it's in the United States or outside the United States, for people who want to kind of hedge out of some regulatory exposure. And we also, when those clients want to either monetize their Bitcoin or other assets by moving across a trading desk somewhere, we can help them do that in tax efficient ways, or we can help them borrow against that Bitcoin on some fairly favorable terms, and then with the borrowings either enhance their lifestyle or create an auxiliary portfolio that's not correlated to the movement of Bitcoin, so they can kind of hedge away some of the volatility that their long hold Bitcoin presents, and those may be in U.S. markets or international markets.
Okay. Jack, anything to add there?
I could add a lot. One thought that comes to mind whenever I hear kind of Matt talk about Bitcoin and the law, and I liken it to Matt being able to speak Bitcoin in legalese and really understand the space deeply and be of that space himself, and that is a interesting combination, and I think is what a lot speaks to our success in serving the Bitcoin community, and where the conversation often starts. And then as we learn about our clients and learn what's important to them, what they're trying to solve for. For instance, like Matt said, our large Bitcoiners have had some interest over the years in developing yield on Bitcoin.
Yeah.
If you do that without planning, there's a lot of trouble that can happen. And we've been working on a solution in that area for a number of years, and we're not quite ready to bring it out, but from what I've seen, it's very elegantly put together. It's global, and it's very interesting, and I'm excited to share more when we're ready in that area.
We believe that Bitcoin is a pristine asset, unlike anything we've ever seen. I mean, it's the kind of asset that warrants really sophisticated long-term thinking and long-term planning, and first and foremost, risk mitigation around it. We've all been in this game long enough to know at least the recent history of the collapse of Mt. Gox, the collapse of Quadriga, the collapse of FTX, BlockFi, Celsius. I mean, our Bitcoin's history is littered with the bodies and corpses of Bitcoin accounts that have gone to zero because people were taking undue, unregulated, unmanaged risk with this pristine asset. And we want to avoid that more than anything else. That's one of the reasons why, we're a family office formed by lawyers with an idea towards being fiduciaries to our clients first, and why we went to the extra trouble of becoming SEC regulated and registered, even when we didn't really have to be at the time, because we welcome that level of scrutiny over our activities, because at the end of the day, it's our job to make sure that our families that trust us don't lose their assets because of some risky behavior. I mean, Bitcoin is a beautiful asset in itself. And so if you can make if you can put it to work in some way that it creates additional value above just the market beta, that's fine. But doing it in a way that is really carefully thought through, so that you don't have counterparty risk, you don't have any other types of risks that could cause forfeiture of the asset. That would be the biggest disaster ever.
I want to hear more about the Bitcoiner you met that kind of started the whole thing, just to get that background, because that's 2017, you said?
2017, yep. So back when Bitcoin was going bananas around $17,000, $18,000, $19,000 and everybody was losing their minds, I don't think I'd even heard the word Bitcoin at that point. So this was, maybe to land a little, maybe to kind of set a little bit of the background. Part of my background includes teaching a lot of continuing legal education to other estate planning attorneys. My co-founder, Jonathan, whom I mentioned earlier, he also has that same background. And so we're educators just at our core. And that was not only with our colleagues, but also our clients. And so we undertake every client conversation, every conversation with podcasters or whatever, with the idea of really wanting to educate people so they have a good understanding of various strategies. So when we launched our law firm in March of 2017, very quickly we started getting asked by other attorneys around the country to help out on large, complicated estate matters. Most estate planning attorneys are fine with clients of moderate wealth, but once you get somebody with 50, 75, 100, $300 million worth of wealth, most estate planning attorneys get way out over their skis really quickly. But that's what our expertise has been in. And so under the law practice, we started doing a lot of those projects very early on when we started practicing in 2017 in this iteration of the law practice. And in November of 2017, I got a call from a friend of mine up in Boulder who said, "Hey, I've got this potential client, and I've been looking at their balance sheet, and it's just a big number. Would you help me with the estate plan design for these people?" I said, "Sure, that's fine. Tell me, what are we looking at?" She said, "Well, there's about $150 million, and most of it looks like it's in Bitcoin." And I said, "Okay, I don't really know what that means, but I'm a curious guy." I said, let's kind of find out and see what this is about. And between that conversation and the time I actually sat down with that attorney and with these folks, I had started doing some research into what the heck is Bitcoin. And in 2017, being a nascent learner of what Bitcoin is, it took me down the Silk Road rabbit holes, and it took me down the Mt. Gox rabbit holes, and it took me into the block size wars and the hard forks and just all this acrimony and kind of negative press around what Bitcoin is. And I said, I don't know, this thing seems pretty fraught and pretty dodgy, but I'll have the conversation because I'm just curious. And so I sat down with that attorney and with these folks, and very quickly I just became enraptured by the story by these people. I said, okay, this is really fascinating. They were telling me about hard money. They were telling me about Austrian economics, which I know is near and dear to your heart. And they were really, they weren't trying to sell me either on Bitcoin or on working with them, but they were really kind of helping me open my mind. And again, I'm a pretty open-minded guy anyway. But at the end of that conversation, as I was going back to my office, my business partner, Jonathan, had been with me in that meeting. He had kind of been reluctant. So, I'm not sure that we want to go down this pathway just because there are too many unknowns. And I said, look, the answer cannot be that an individual or a family who has significant wealth in an asset where there is ready price discovery, it has it clearly has market value. This is the vast majority of their wealth. The answer cannot be that nobody is going to help these people with structured planning around this. I said, if we can figure out enough about this asset so that we can substantiate the transfer of Bitcoin from an individual who's holding in self-custody into a trust or some other type of structure that can change the tax characteristics of the Bitcoin, then if we can demonstrate how you've transferred that to a trust or some other structure, then everything we have ever done for conventional assets is now on the table for Bitcoin. That was like my challenge, and that became my epiphany moment.
With Bitcoin as the pristine collateral at the base of it.
Right, because you're talking about a digital bearer asset that has no tangible form. We had to figure out a way to create a custodial vault that was underneath the hierarchy of a trust structure somehow. And I said, well, that's our challenge. And so that kind of started me on this journey. and down the Bitcoin rabbit hole. And I came across some really interesting conversations. I can't name names because that would be betraying some client confidences. But I met a growing number of people in the space. I started going to every Bitcoin meetup I could find in 2017 and in 2018. And starting in February of 2018, we had done a lot of really interesting advanced estate planning strategies, including various irrevocable trusts, some offshore strategies, some various company structures inside of it, in order to allow these individuals to do really structured, highly private, highly asset protected, highly tax efficient estate planning strategies with Bitcoin as the core underlying asset. And then that engagement, first of all, those people were satisfied with our work, and they said, "Hey, can we pay you in Bitcoin?" And of course, the answer had to be yes. And so that was my first on-chain experience, was receiving a significant fee on-chain in Bitcoin in February of 18. And the answer is yes, we held that and have held that to this day. And then the client said, "Hey, in addition to this structured planning, are you willing to provide other services like can you facilitate real estate closings for us? Can you help us structure our multi-signature vault controls on other custodial solutions? Can you help us facilitate banking and things like that? Can you help pay bills and project manage some things?" And so our default answer had been, yeah, let's figure that out. And so the use case for Bespoke was born because we were creating something tailor-made for what this client needed. And so we somewhat inadvertently became a fractional virtual single-family office for one Bitcoiner. And then back to the conversation around education, I started doing a lot of writing and a lot of presentations to other estate planning attorneys and other professionals around this. What is this intersection of estate planning and Bitcoin and crypto? What does this look like? And where are the opportunities and how do you do this? And my objective in that really was to hopefully get other attorneys and other fiduciaries to be comfortable enough with the asset to engage in this kind of planning. And I guess in the realm of happy accidents, it just said, they just said, I don't want to learn that. I'll just send those clients to you. And so we started getting more and more and more and more. And that became the thrust of our practice really from 2018 forward, so much so that Bespoke has taken on a life of its own. And this is actually the last month I'm practicing law as an attorney. We're winding down the law practice at the end of this month, and leaning 100% into Bespoke because it's such an interesting and it's kind of become my life's calling.
Yeah. I'm interested to pivot towards getting people to give you their Bitcoin or custody with you guys. How do you guys think about that? I'm sure the SEC filings and all that sort of stuff sort of helps out, ease people's minds. But how do you guys go about getting people to?
Well, I mean, that's the biggest challenge, and I get it. I mean, I think the first thing to say is that we are not custodians, so we don't custody people's Bitcoin, and so we are SEC registered, and so we are under the custody rule, which means that to the extent we can help a client directly with their Bitcoin in some type of multi-signature structure, those signature structures have to be through some type of qualified custodian. And so what you highlight is the biggest issue, because one of the things that was pounded into my brain early on as I was going down the rabbit hole was from Andreas Antonopoulos and Trace Mayer, and not your keys, not your coins, proof of keys, and all that kind of stuff. And that became part of my ethos. I kind of address it in kind of several ways. First, it's a slow series of conversations. It's not like you just jump into bed with somebody. You got to court for a long time before they have enough trust to say, okay, I'm willing to bring you into my inner circle as an advisor and to help support this. It's also not an all or nothing proposition. And so we're not saying people should put all of their Bitcoin in any one structure or in any one basket, especially if they've got significant holdings. They ought to diversify their holdings probably through multiple strategies and through multiple custodians. And they should probably always just keep some that they have absolute sovereign control over. But I think the sovereignty narrative is a bit overwrought, and this is something that I talk about a lot, and that is that it's one thing to say that you have control of your key material, just like saying I've got control over the vault that holds the gold, or I've got control over the bag of rubies or the stack of cash. It's like, because I and I alone control that. Okay, that's all well and good until you get hit by a truck. And then what happens next? So there's the idea of sovereignty, I think, has to extend beyond unilateral control of key material. The grim reality that I've dealt with now for decades in my career is that we are all subject to the frailties of humanity, which means that we will probably spend some period of our time incapacitated before we die. We will all be doddering around someday, fumbling through our words on stage somewhere, and non compos mentis. And we know that life has a 100% mortality rate, so at some point we're going to die. What happens next? If we have not created a clear, enforceable plan in the form of a will or in the form of some type of trust structure, then we have no sovereignty at all. We are relying on the guidance of the prevailing statutes in the jurisdictions where we died, and then we are sending our families in front of a judge in a public forum to say, Will has had a stroke and he's incapacitated, or Will has died, and please, Your Honor, may I be appointed to wrap up his financial affairs. And that's true if you have no plan or if you have a will as the primary component of your plan. Trusts privatize that entire process. And that's why I come back to this notion that Bitcoiners at any level should have some type of trust. And there's a broad spectrum of types of trusts. But trusts, at the end of the day, are an exercise in sovereignty because it is private. You maintain control over what happens, what decisions get made, and the trustees that you select are fiduciary bound by the terms of the document and by the terms of law to execute your wishes consistent with that document and consistent with the law. And so that's just part of the sovereignty conversation.
And being in that place where having a regulated environment opens the door to traditional financial solutions and services is really a big unlock for Bitcoiners to be able to solve things like estate planning and looking after your family and beneficiaries after you're gone. And I think it's an evolution in the crypto native approach to solving things that straight technology isn't able to solve.
I think Bitcoin makes it harder because Bitcoin is a complicated asset. It's got a lot of qualities of gold. It's got some superior qualities that gold does not have, but it's still complicated. It's not common knowledge to understand how private keys work. So there's the complication factor, which could take us down a whole other tangent. But then there's the other reality that when we're dealing with really wealth of any level of consequence, if you're talking about just dropping that in the lap of somebody when you're gone, I'm married. If I were to just drop dead and everything were to pass outright to my wife, down the road, if my wife were to remarry, then the assets that she has outright now become assets of that new marriage. If my wife then predeceases that new spouse, guess who gets that wealth, including the Bitcoin that I built? That new spouse and or that spouse's kids. I have now, through failure to plan, I have disinherited my own children through a failure to plan. And that's true whether it's Bitcoin or gold or brokerage accounts or real estate or whatever. That's what happens in the absence of a plan. And even if that doesn't happen, let's say that my wife distraught as she is, never remarries because she could never replace somebody as amazing as me.
I believe it.
Yeah. And then my wife passes away down the road. I've got some amazing children. They're very mature. But if we were to drop $100,000, $500,000, $5 million, whatever the number is, in their laps, maybe they're not prepared for that kind of a windfall. They probably aren't as great as they are. And even if they are mature enough to understand Bitcoin and or to understand what to do in making sound money decisions, what if their marriage falls apart? What if they get sued in a business failure? What if they declare bankruptcy in some other context? The inheritance that I left them without a structure around it is now subject to the claims of their creditors, whether it's a divorcing spouse or a claim in bankruptcy. If I structure my planning through some type of protective trust structure, then my children, my wife, can enjoy the benefits of that wealth. They can largely control that wealth without the burden of ownership. And that way it remains very highly protected in a private and tax efficient structure. That's what estate planning is all about. And estate planning with Bitcoin is really not much different.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
So for Bitcoiners, not to return to the same question, but going to a little bit, what has been like the thing that's gotten them to pay attention to you guys? Like what's been like the sales pitch, if you will, not to boil it down to that, but like to get them across the line, because a lot of them can be pretty stubborn.
Well, I don't know that there's much of a sales pitch. I mean, it's a journey, it's a conversational journey, and it's
a relationship.
It's a relationship, yeah. And I think that Bitcoiners are, Saifuddin Ammous talks about the low time preference notion behind Bitcoin, and Bitcoiners, unlike a lot of other people who come into a significant amount of wealth, they don't kind of YOLO into the spending habits. We saw that certainly during 2017, 2018, and 19 and stuff like that. But the people who have been in Bitcoin, the people who seek us out as advisors to them, have a sense of maturity around them. They have an appreciation for this asset as something that has become, among other things, a store of value that is unlike anything else, and they want that preserved. And so they're sober-minded, patient people. And so we don't really have much of a sales pitch. It's just a matter of, people who, our conversations center around privacy, control, sovereignty, and managing your destiny for your family. And it's kind of like, I can't remember who's credited with this quote, but I think I know who it was, but I won't say it because I think they're somewhat vilified now. But everybody gets Bitcoin at the price that they deserve. I think everybody gets estate planning at the timeline they deserve. It's when they're ready for it, when they are concerned about privacy, when they're concerned about sovereignty, when they're ready to take their wealth seriously. That's when they engage in conversations like this. And if not, if something happens, and this is the cynical counterpoint, I think, is if something happens to them, like Mircea Popescu or whatever his name was, drowns off the coast of Costa Rica a few years ago, dies without any kind of succession plan around their Bitcoins, well, guess what? More Bitcoin is out of circulation. That means it's more scarce, which means my Bitcoin, which is properly planned for, has become more valuable. So, that's a very cynical approach. But, I think that's kind of the grim reality.
Another story that came to mind when you're talking there, Matt, is the technological burden that can happen when the wealth creator passes, let's say in a scenario like that, where, the Bitcoiner, the wealth creator, early Bitcoin dude, lady, has built all of this wealth, has gone deep down the rabbit hole into Bitcoin, is living the values, associates their identity with the movement, and sees the importance of it and why and the how. And then you go to the family and the beneficiaries, and they're like, Bitcoin? What? XYZ is super into it. I like, ballet, or you name it, right? Anything under the sun.
Dad's crazy magic internet money. And
yeah. Historically in the Bitcoin space, people have considered self-custody to be the primo, the all-time, but that takes some technological expertise. And furthermore, it takes a large understanding of the asset class, of what it is, why it is, how it relates to the rest of the world, and what it's doing to change the fabric.
Bitcoin is an ideological decision. I think that what I kind of come back to, and I use this comment a fair bit, we're all taught to be our own bank. It's part of what we all hear. Well, being your own bank is fun and neat and groovy if the total value in the bank is like $50,000 or $100,000. That's fine, because there's a good chance that you have significant wealth outside of Bitcoin, and you can plan for that stuff. And if somebody gets locked out of the bank, or the bank burns down, okay, it sucks, but it's not the end of the world. But if the bank is now worth $1 million, or $5 million, or $200 million, or whatever it is, that's a problem. If one person has the keys to that bank, that's a big problem. And if charlatans have keys to that bank, or if unregulated service providers have keys to that bank, that's a big problem. So the conversation for us really centers around, at the end of the day, people with significant Bitcoin holdings have to find ways to trust people with shards of key material. And depending on the nature of the structure, they may or may not have the controlling quorum of the key signatures. They can and always should have visibility. They can and always should have the ability to remove and replace any power holder at any time without cause. And that's part of the structure of any well thought through strategy. But the people who manage the keys have to be reputable. But look, I'm admitted to practice law in 4 jurisdictions. We're SEC registered. If we were to abscond with anybody's assets, that would be the end of the road. And so people have to choose to trust somebody. They're either going to trust their surviving spouse, they're going to have to trust the technology that they're relying on, they're going to have to trust that their key signature device doesn't have a bug in it, they're going to have to trust the protocols that they rely on, unless they're going to audit the code and create their own thing. And the reality is, when Bitcoin was just magic internet money, and the value wasn't consequential, being your own bank is fine. But now we're dealing with a digital superior asset to any other asset that we've seen. And even though it's only trading around 56,000 or whatever it is today, that's a lot. And so now we're talking about consequential wealth. For people who have a whole coin or more, you better do some type of planning around that. And then depending on the size of the stack, you may not have to trust any third party with the key material, but you probably need to have some kind of cascading multi-sig around that wealth. And if the value of the Bitcoin or whatever assets is very significant, and now you need to start thinking about estate tax-oriented planning, then you do have to find independent third parties who will be able to control the quorum. That's just the reality of getting the value of any asset, Bitcoin or anything, of getting it out of your estate from an estate tax perspective.
Let's pivot to talk about other forms of like Bitcoin wealth that are interesting, I think, for listeners of this show, particularly like mining stocks, or just if you're a Bitcoin miner and you have equity in a Bitcoin mining company, something like that. How would you speak to someone like that who, maybe they started a Bitcoin company 2 years ago and they have significant upside and equity in that company? How do they kind of prepare for that situation? In this instance, we're speaking to private equity, right? Or like private to the company, like it's an equity position in their own company, or they have options or RSUs of some sort.
Yeah, I mean, that kind of planning is no different than any other type of planning for a successful entrepreneur in any context. It doesn't matter if you have a Bitcoin mining operation, or you have some interest in a data center, or if you've got founder stock or RSUs in Google or Apple or whatever. That's really no different. The question that we would ask is, what do you want to do with the wealth that's generated by this activity? If you're looking to sell this at some point in the future, okay, what do you want to do with the proceeds? There are various strategies that you could consider to mitigate the income tax consequences on the recognition of the sale. But if your idea is to then enhance your lifestyle directly and consume some of that wealth, that's going to lead you towards certain strategies that are maybe less tax optimized, but more kind of that create opportunities for you to really enjoy that windfall in ways that are highly private and ideally highly protected. Versus if you say, you know what, this has been a great ride, I want to liquidate my position here, and then with those proceeds, I want to reinvest in the next thing, and then reinvest in the next thing, and ride it, roll it, build family wealth. That could put us into something like a dynasty trust. So we could, through a combination of a gift to this trust during your lifetime, and maybe later selling more assets into that trust. Then when you have the recognition event, you have the sale of that event, you may or may not have done some income tax planning around that. That's another conversation. But now you have this massive windfall of wealth that will never be subject to estate tax. Not only when you pass away, but maybe when your kids, grandkids, and great-grandkids you've never even met pass away. You can have this engine of family wealth. And that's true whether it's Bitcoin or whether it's stock in a Bitcoin mining company or RSUs in some type of enterprise. But really, when you're dealing with mining interests or anything like that, the strategies aren't any different than any conventional assets. I do think it probably it gets a little bit different. We kind of have to thread the needle or maybe walk both sides of the line here when you have something like a Bitcoin mining operation and you have the equity in the enterprise, as well as the rewards that come through your mining activity. And then the question is, how much of those mining rewards are assets inside the company versus are those rewards distributed out to the equity owners of the enterprise, and in what form? So all those things I think have to be considered in how you structure that stuff. But it really all comes back to, what is it that the owner of the asset wants to do once they have that recognition event? Let's kind of begin the strategy conversation with that end in mind. And that then becomes this recursive function that we always point back to in refining the strategy over time.
Can I give you guys a hypothetical?
Yeah.
So I know, well, it's not really a hypothetical. Our for our company, Charlie, runs Bitcoin mining company with 3 partners, and they split the profits. So they have some sort of JV deal. I don't know exactly it, and I don't want to give all this information away, but they have a few Bitcoin mines in Oklahoma, and all the Bitcoin proceeds go to like one central location, and then they split them up, all the Bitcoin rewards. And then I don't know off the top of my head if they distribute the Bitcoin to each partner or if they distribute the USD after liquidation of it. But that's a pretty common situation because these things are so capital intensive to have a partnership of some sort. So how would you go about, for say, someone like Charlie who, and hypothetical, right? So like be as abstract as you want, of course. How would you go about putting that wealth into a trust and securing it so there's less taxes, there's more upside for using that wealth in the present, maybe for reinvestment, those sort of things?
I can try to answer that a bit, but the devil's in the details, of course. The conversation for a guy like Charlie would be, again, what is it that you want to do with the proceeds from this? Because you may or may not get significant tax benefits, But what you absolutely can get is significant privacy, so you can enjoy your wealth discreetly without drawing attention to yourself.
And to jump on that privacy note there, when assets move to beneficiaries without a trust structure through the public process of probate, without privacy, without privatizing that process, the beneficiaries now have targeting risk. And so that's an important family consideration.
Yeah, no, I think that's exactly right. And so what somebody in that kind of situation can and should do is think about, okay, well, when I take my profits off of this, what do I want to do with those profits? And then maybe Charlie wants to buy some real estate somewhere, wants to buy a home in Oklahoma City or in Arkansas or somewhere here in Colorado. Well, then he should create some type of structure that's highly private, ideally highly asset protected for him, some type of limited liability company or something like that he would then capitalize that LLC with his proceeds, whether that's in Bitcoin or whether that's USD equivalent distributed in Bitcoin, distributed from the Bitcoin. And then through capitalizing that limited liability company, he goes and purchases a piece of real estate through that LLC. That is one layer of privacy and protection he can add. The question then becomes, how is the LLC itself structured? Who is the manager of that LLC? If Charlie, who owns the LLC, maybe he calls it, Satoshi's Dream LLC or whatever it is, well, nobody knows what that is. But then if they see that Charlie is the one who organized that and Charlie is the manager of that, it's pretty easy to figure out who's behind that LLC. But if, on the other hand, Charlie hires his friend Will or somebody else to be the manager of that LLC and says, hey, Will you go to closing for me and you close on the title of this piece of real estate, Charlie's name doesn't appear in the chain of title on that piece of property. Will, as the manager of the LLC, does, but you're not the owner of the LLC, you're just the manager of the LLC. Then Charlie could take that LLC interest and transfer that LLC interest into some type of other protective trust structure, and now he can have multiple layers of privacy and multiple layers of asset protection around his home or whatever assets he's put into this type of investment vehicle. And it just happens to be an investment vehicle that is that owns a house in a trust that Charlie's the beneficiary of. And so now he's got multiple layers of privacy, multiple layers of asset protection. The tax planning becomes a bit challenging because in that kind of situation that you're talking about, Charlie is looking to consume that wealth himself. And so he's really not fundamentally changed his relationship with the wealth or with the proceeds of that. So his tax outcomes really aren't going to be any different. But that's kind of what it would look like if he was wanting to personally directly benefit from those proceeds. But what if Charlie's been married to his wife for 35 years and says, you know what, we're in this thing for the long haul. I'm not going anywhere. She's not going anywhere. What if instead of Charlie creating that whole structure for himself, he creates that structure for the benefit of his wife and maybe their descendants? Then Charlie could get the value out of his estate from an estate tax perspective. Let's say Charlie's total aggregate wealth is like $15 million or something like that. Well, he could use his present day estate tax exemption by creating these structures, creating a trust that owns those structures for the benefit of his wife and his kids. And he could use up his estate tax exemption now. So then if this home up in Telluride or in Aspen or someplace like that goes from being worth $10 million to being worth $25 million, well, all of that growth escapes estate tax when Charlie dies. It escapes his wife's estate tax when she dies, and now the property is worth even more. And then so on down the road for multiple generations. And then if the family says, you know what, we're going to take our profits off of this home in Telluride or Aspen or wherever it was, and now we're going to roll that into the next enterprise. So maybe this family-owned LLC that is owned by this trust no longer sits on real estate that we enjoy, but maybe we're going to put $10 million of those proceeds into the next big startup, and that startup goes 10x. Well, guess what? All of that growth is also outside of everybody's estate for multiple generations.
And that can be mining company equity.
Absolutely. It could be anything. It could be anything. And a lot of people get wrapped around the axle around income tax, understandably so. But the thing to bear in mind when you're dealing with significant wealth is that the estate tax rate is 40% over your estate tax exemption. So people get wrapped around the axle about, hey, I want to hedge my 20% capital gains tax, or I want to hedge my 35-ish% income tax, and that's all well and good, because that's tax that we feel when we pay our income taxes at the end of the year. But the estate tax is a 40% hickey on every dollar above whatever your estate tax exemption amount is. So if you are a super successful entrepreneur in this space, 25, 30 million or more, and you've got a large taxable estate and you've not proactively planned for this, then every dollar above the estate tax threshold is your family's going to get 60 cents on the dollar, and you have to pay that within 9 months of your date of death. So if you're dealing with an asset that is subject to cyclical drawdowns like Bitcoin is, and like the corresponding mining stocks are and everything else in this industry, if you happen to die at the beginning of a bear cycle, and now your family is having to liquidate family assets to satisfy a 40% tax bill in the middle of a market pull down, your family is missing a tremendous amount of value that you just spent your lifetime building. And that's a catastrophe. I think one thing I want to say about the estate tax is that the current estate tax exemption threshold is $13.61 million per taxpayer. A married couple each gets that 13.61. So a married couple can pass, under the current law, can pass up to $27.22 million to their ultimate heirs free of estate tax. That covers the overwhelming majority of people in the country. Now, there are plenty of people in the Bitcoin mining space and in Bitcoin generally who have very large estates. The other thing to bear in mind is that they're already well above that number. The other thing to bear in mind, though, is that those estate tax exemptions were set by the 2017 Tax Act. And the 2017 Tax Act, like every tax act, has a expiration date. It's built in, it is codified that the 2017 Tax Act will end if Congress and the president don't do anything else, and Congress and the president are good at doing nothing. If they do nothing, the estate tax exemption will be cut in half at the end of 2025. So the 2017 Tax Act doubled the estate tax exemption from $5 million per taxpayer to $10 million, and that number is adjusted for inflation, which gets us to the 13.61 right now. But then at the end of 2025, we will wake up January 1, 2026, wicked hangover, and we just lost half of our estate tax exemption. It just got cut in half back from 10 million to 5 million. And if Bitcoin continues on its trajectory, if you fast forward now to what the Bitcoin price might be in 2026, you might have awakened to realize, holy cow, now I have a taxable estate. I mean, that's not going to be the first thing that you're thinking about on New Year's Day, but it's like, holy cow, now I've got a problem. You could have done this planning back in 2024, 2025. Do your planning now so that all of that future beta on the value of Bitcoin is out of your estate, or the value of your Bitcoin stocks. If you're a stockholder, a shareholder in these mining companies or anything like this, your interests get them out of your estate now proactively, so that if Bitcoin continues its long trajectory upwards, then all that value can be captured outside of your taxable estate, and you just saved your family 40 cents on the dollar.
And that's a great highlight of how sometimes market risk and pricing risk isn't necessarily the only thing you should be thinking about when, legacy tax and family planning and things like that come into the picture. 40%. That's a significant.
That's a big bite out of family wealth, and there's really not much time to. Once that tax bill comes due, you got 9 months to satisfy it. That's a problem.
For mining stocks, I'm going to talk about that for a second, because I think a lot of listeners of the show are interested in that. And the noob question, I think we talked about this on the phone, Jack. Like, can someone take interest in a mining stock, a public mining company that's maybe in an IRA or something like that? Can they move it into a trust of some sort? Or would there be any ability to move something that's in something like that into a trust?
You can't do it with an IRA, because an IRA is an individual retirement account. It has to be owned by an individual. So trusts and other structures can be, if appropriate, can be the beneficiary under an IRA, but the ownership of the IRA must rest with an individual. I can't take my IRA and transfer that to an irrevocable trust and get the value of the IRA out of my estate. It's a non-qualifying owner. So you can't do that with IRAs. You have to kind of do other planning around the margins when it's not inside your IRA.
Okay. Because there's a lot of people who are sitting on mining stock gains right now.
100%. Absolutely. Yeah. Absolutely. Yeah. I've got a couple of self-directed IRAs that have a significant interest, not in mining stocks, but in Bitcoin and in a fund. The value of that is going to be countable in my estate from an estate tax perspective. Now, depending on how old you are, if you're beyond 59 and a half and you can start taking those out without penalty, you could start pulling that out without penalty. You're going to if it's in a Roth, that's fine. If it's not in a Roth, you're going to pay some income tax on that distribution. But then you could put that amount that you've distributed or withdrawn from your IRA, you can put that into one of these types of trusts. But the IRA itself must be owned by an individual.
So you take the USD value out and then put it within.
Right.
Okay.
Right. Or you could take it out in kind, theoretically.
Oh, really? Okay.
Yeah.
Okay. That would be an interesting thing, I think, for some listeners who are sitting on these things. The other thing I want to touch on is let's call them more exotic assets, like JPEGs, things like that. What does that look like for a trust for someone who bought a JPEG a year ago and it's up 10, 100x? Because there's many cases of that.
It's really not fundamentally different than planning for any other type of digital asset. You're dealing with, let's say that you've got a JPEG collection that has got some consequential market value. You want to get the value of that out of your estate from a transfer tax perspective. You have to do one of two things. You either have to create a trust and have a trustee who is comfortable with directly sitting on a vault or account that can hold that asset, JPEG or whatever. Or one of the things that we've done a lot and that we're encouraging a lot of people to think about is instead of putting that asset directly inside the trust, you can put that asset inside a very carefully structured limited liability company, and then you put that limited liability company into a trust. And the reason you would do that two-step approach is there is a profound shortage. I can think of maybe one trustee who's a professional trustee who will sit directly on digital assets. There may be more, but there's only one I'm familiar with, and I don't even know if they'll sit on JPEGs. I don't think they can. But any trustee in the country, any trustee in the world will sit on an LLC interest. So what you can do is now you have to structure the LLC very, very carefully, because the LLC, the structure of the LLC has to mirror effectively the structure of the type of trust to get the value out of your estate. But often what we'll do is we'll say, okay, well, maybe we create a limited liability company that bifurcates the management structure. So instead of having one manager that holds all the control, maybe you have two different managers. You, the holder, the original holder of that JPEG, you are what we call investment manager, and you make all the investment decisions. Nobody buys or sells or does anything with any assets inside this company until you, the investment manager, says so. But you have an independent third party who serves as the general manager,
which can be replaced.
Which you, the owner of the LLC, can remove and replace anytime you want to without cause. But that general manager follows your directions. They're the ones who, you say sell, we sell. You say hold, we hold. You say put it in this vault, we put it in that vault. You say distribute it, the general manager distributes that. And so that's part of the use case that we created Bespoke to do. And so we can create that. We call it a bifurcated limited liability company because, again, we have bifurcated or separated the two forms of management control. So step one, you create this LLC, this bifurcated management LLC. You are the investment manager. Day one, you're the owner of that LLC. Day two, you transfer the value of that LLC into this irrevocable trust that's structured to get the value out of your estate from an estate tax perspective. The trustee on the other end of the trust They don't care what's inside the LLC. It's just an LLC. The activity for the digital asset takes place inside the limited liability company. And so then if you as the investment manager says, you know what, this JPEG has been a really great investment, but now I want to liquidate that, fine. You make that call as the investment manager. The general manager of the LLC liquidates that. And now instead of sitting on a JPEG, your LLC is sitting on fiat or whatever. Now you as the investment manager say, okay, general manager, let's go buy that house, or let's go start another company, or let's go long Bitcoin, or let's do whatever. You make that call. The general manager has to follow your directions. And if you don't like what the general manager does, you remove and replace them with somebody else.
Need ASIC help? Check out Vitamine, one of Bitmain's certified repair shops located in Washington State with satellite offices in Colorado, Oklahoma, and Texas. PSUs, hashboards, immersion setups, in and out of warranty repair, Vitamine has you covered. Want to train your technicians? Bring Vitamine to your site for hands-on training in the art of ASIC repair, complete with Bitmain AMTC certification. Contact Vitamine today at dan@vmasic.com. Again, that's dan@vmasic.com. When you think of ASIC repair, think Vitamine.
We're coming up on like an hour here, and I want to talk about like what are other options for this sort of thing out there. And the answer might well be nothing, right? And I just want to get that for context for everybody. Like, what are some other options for someone who's trying to responsibly take care of their gains? What are some things that you guys say are like on the table?
A lot of the people that we have the privilege of working with realize that they have come into a surprising amount of wealth that they really don't. That is really kind of shocking to them, and they're humble about it. They're modest people, and they say, you know what? There's really no set of circumstances under which I want to give my kids $100 million or $50 million or $20 million, whatever the number is. They just kind of say, look, you know what? I am a product of the adversity that I came from. I want to make sure that my kids have a soft landing if that's what it comes to, but I don't want to just give my kids everything. For a lot of people, especially people in the Bitcoin space, they are driven by something bigger than that. And so that drives a lot of philanthropy. And whether it's Bitcoin specific philanthropy or whether it's social causes or religious causes or whatever, very often people say, you know what, maybe I want to take a portion of my winnings and structure that so that I can fuel a greater good in some capacity, whatever that means to them. Well, one of the benefits of that kind of worldview is that the Internal Revenue Code, the U.S. tax code, is very favorable towards charitable contributions. And so one of the things that we help clients think through, if they have some type of philanthropic intent, they say, look, what would it look like if you carved out 10% of your equity in the company or 10% of your stocks in the mining enterprises or even 10% of your Bitcoin, and we put that into some type of charitable structure. Well, that will generate an income tax deduction that can help offset your gains. And that could be something as truly straightforward as setting up a donor-advised fund that can sit long Bitcoin, which we do as well. That could also be helping them create an advisor-managed donor-advised fund that's going to hold a slice of their enterprise. Maybe it's Charlie's company again. Or we could say, look, there are different types of trust structures that say you can give away part of the wealth for a while in what's called a charitable lead trust. And the charities that you have selected can get like an annuity stream off of that for a period of time. Yeah. You get a big upfront deduction for that type of structure. But then at the end of that charitable annuity period, whatever's left in the trust is a tax-free gift to your family. I mean, that's a wonderful outcome. There's also the inverse of that says, look, maybe I don't want to give the money to charity today, but maybe I want to give money to charity in 15 or 20 years, or maybe at the end of my lifetime. You say, well, maybe instead of putting, maybe instead of a trust that creates the charitable annuity up front, what if I create a trust that pays the annuity back to me for a period of time? I can have a capital gains recognition event through this charitable structure, and now I get to pull back money in a very efficient tax-deferred way. And at the end of my annuity period, the remainder gets distributed to the charities I've selected, which might be my own family foundation, for that matter. So people who have kind of what we'd consider maybe more of an evolved worldview, and they say, look, I want to help make the world a better place because I believe in the transformative power of Bitcoin. It's been transformative to me. It's been successful. I kind of believe this is how the world should work. They can put their money where their mouth is and say, maybe I'm going to carve off 10% or 5% or whatever of my mining stock or whatever it is that's got low basis, put that into one of these charitable remainder trusts. Then when you decide to sell, and you get a deduction that when you make that gift, then when you later sell that slice that's inside the charitable remainder trust, there is no recognition of capital gains tax at that time. You can stretch out the recognition of that tax over a period of 20 years, maybe over the course of your entire life. It just depends on how old you are when you set up these structures. So there's a lot you can do, but the facts have to fit the values of the individual.
Last thing I wanted to touch on was you said to me multiple times, I think, Jack, you want to do this early. You want to do this before the gains happen. Why is that? And what would you kind of say to people right now who are like looking at this, but kind of sitting not as motivated as they should be to like make a decision?
Yeah. First thing that comes to mind is tax optimization. So when you're utilizing the lifetime gift tax exemption of currently $13.5 roughly $1 million, and moving assets through that exemption into a trust structure, you don't have to use as much of that exemption when your assets are low cost basis. Yeah. So getting assets into the trust estate outside of your personal estate allows the appreciation of those and the lift of those to happen in the trust estate. So it's a tax optimization, but there's also asset protection and privacy benefits that are important as well, as a quick answer.
I think that's right. I mean, it's hard to get people to do a lot of planning when they don't feel rich.
Yeah.
Because it's like, wait, Bitcoin just took a 10% haircut or whatever it was, and maybe I'll do some planning when everything is nice and frothy and I feel rich again. This is actually when the prices are soft. And it's hard to say that $55,000 or whatever it is today is soft, but it seems counterintuitive, but people have built-in leverage when they move any asset, whether it's Bitcoin or stock or whatever. They move the value out before the lift comes. And so if people are long any asset, get it out of the estate. And we can do so much more efficiently if we can move assets out with a low valuation. You can just get more value out. I guess the last thing I'd want to say about irrevocable trusts too, by the way, I mean, some of these structures, whether we're talking about charitable trusts, whether we're talking about the dynasty trusts, the trusts that we might create for our family or whatever, they seem kind of scary, but they shouldn't, because yes, you do have to fundamentally change some of the decision-making authority over the direct assets, but that doesn't mean the assets just become inert once they're sitting inside this structure. You can do a lot to maximize and optimize value inside this trust, these various types of trusts. You can continue your entrepreneurship. You can create the next companies. You can do whatever you want to do through these trust structures, so that all of this value is now mushrooming out of your estate, and you don't have to just give it all away. There are trusts that are out there, there are trust designs that are out there that you can establish that you can either directly or indirectly still benefit from, while you still have these in asset protected structures that are highly private and that are also tax optimized. So it shouldn't be scary for people to think about putting assets inside a trust. It's not just like sequestering these assets that you no longer have access to. It doesn't have to be that way.
Okay, cool. Let's finish up. Just like, where can we find you guys? More about Bespoke. Get some plugs on some information.
We're located right here in the Rocky Mountains. We're just up in Evergreen. The website is bespokegroup.io. I think on Twitter we're like Bespoke Group CO. You can find me on LinkedIn just by searching for my name, Matt McClintock. I'm also on Twitter at McClintock_M, I think. Otherwise, I'm around.
Jack?
Yeah, I'm on LinkedIn as well, Jack Jones. I'm on Twitter at Dollar Jones. Nice. Ironically, Yeah, those are two good contact points for me.
We'll have all that info in the show notes as well. But hey, thank you for driving down from the mountains and for taking, what's 3-4 blocks away, over here. Appreciate you guys joining the pod.
Man, absolutely. Thanks for having us.